So, Dean, just keep accepting people if you can, and I will get us launched. All right. So, first, I want to welcome everybody for attending tonight. This is our kickoff for the Pittsburgh Faith Driven Investor 2024 monthly virtual series we call Treasure Talks. We created this series to inspire, educate, and equip Christians to steward their earthly treasures following the words of Jesus. We do this in our 21st century Western Pennsylvania context. These will be 1 hour sessions, and they will be recorded and put on our Mighty Network. Speaking of our Mighty Network, let me introduce who we are and what we're doing here tonight. So at Faith Driven Pittsburgh, we're simply a network. We're not a for-profit business trying to sell something or a nonprofit organization looking for donations. We're simply a kingdom network. And as a kingdom network, we were created to connect entrepreneurs and investors to promote flourishing on earth and treasure in heaven. And we do that by connecting entrepreneurs with entrepreneurs, investors with investors like we're doing tonight, and down the road, investors and entrepreneurs together in hopefully some unique gatherings. We're a local expression of the worldwide faith-driven movement. They're like us, no selling, no donations, but they're looking to add tremendous value to Christian entrepreneurs and investors. So if you like tonight's session, share this, help us spread the news and grow this network here in Pittsburgh. But let's jump right in. Tonight's topic is faith-driven investing in public and private markets. It's a broad category for investing, and we're joined tonight by two experts from Sovereign Capital, John Coleman and Matt Munson. Thanks, guys, for joining us. Let me introduce them briefly. John's a managing partner at Sovereign Capital. Prior leadership and executive experience for John is at Invesco, McKinsey & Company, Bridgewater Associates, and the Housing Partnership Network. John has degrees from Berry College, Harvard Business School, and the Harvard Kennedy School. John lives in Atlanta with his wife and 4 kids. Thanks, John. Next, we have Matt Munson. Matt's a partner and portfolio manager at Sovereign Capital Public Markets team. Matt has a passion for investing in publicly traded companies and a wealth of experience from prior leadership positions at Aramark Partners, Deccan Value Investors, Brave Warrior Advisors, FTV Capital, and UBS. Matt has a finance and marketing degree from the Carlson School of Management at the University of Minnesota and an MBA from the Kellogg School of Management at Northwestern University. Matt lives in Denver with his wife and 3 daughters. John and Matt are not just recognized experts on Wall Street. They're pioneers in the relatively new field of faith-driven investing. Investing with a kingdom mindset and for a kingdom return. This was a new concept for me and one of the reasons we set up this network. I'm sure it's going to be new for many on the call and for those who listen online later. So Matt and John, let me first just say thank you. Welcome to this Pittsburgh team. And you guys are the real experts just based on those credentials. So take it away, please.
Yeah, absolutely. So I'll kick off if everyone can hear me and then invite my colleague Matt to pitch in. First, let me say we're incredibly grateful to you all for having us. I think this is the first in a lineup of speaker series, Tim, if I'm remembering
First
properly.
one.
And
Setting
so
a high bar here, John. So
very low bar. Your future speakers will be grateful, at least for my contribution. Matt will raise the bar quite a lot. We are grateful to you all for forming this network. We obviously think of ourselves as a firm, but we're a part of a broader movement in faith-driven investing. And one of the things we love to do is try and raise awareness about that and give people different options, which hopefully you'll see tonight. And we're grateful for Tim and everyone else in the Pittsburgh network for assembling this, for getting people together, and for starting the conversation. And I would say on behalf of Matt and I, we want this to be a conversation. So we've teed this up as a conversation in 2 parts, and we'll kind of pause between those, but you're also welcome to introduce questions as we go throughout. The first part of that conversation is really going to be a setup for faith-driven investing as a part of values-based investing, at least the way that I see it, and an articulation of why that might matter to a Christian or a person of faith, and how you might implement that broadly. So more of a market overview, as well as an overview of some of the dynamics in the industry. And then Matt is going to follow along after that, if it sounds good to all of you, with an articulation of what that can look like in public markets. So he started two public equity funds, the Omega Fund and the Sovereigns Flourish Fund, which is an ETF traded on the New York Stock Exchange. And he'll talk about this thesis for faith-driven investing and human flourishing as applied in public markets, including some of the early results that we've seen as a part of that. So I wanted to kick off, and Matt's got a few slides here that I'll pull up, just talking about a general framework for why are we even talking about the principles of faith and investing. And if you go to that first slide, Matt, there are over 2,350 references to money in the Bible. There are obviously some negative ones, like money is the love of money is the root of all kinds of evil, for example, being the most famous. But there are a fair number that also address how a believer can faithfully steward money. And there's a call, at least here in Luke 16:10-12, to steward financial resources well as a mirror image of the way that you'll steward even more important resources. If you haven't been faithful in unrighteous mammon, is the way the verse states it, who will commit to you to trust the true riches? And whether this or the parable of the talents, clearly throughout the Bible, we're warned about the love of money and the ability for money to mislead us, but we're also encouraged, if we've been given money to steward either on our behalf or on behalf of others, to do so well, to expand it and to dedicate that to kingdom purposes. And that's one of the reasons I think this conversation around investing is so important. Flip ahead, Matt. We usually think of what we can do with money in three different buckets. I'm a simple guy, so I like to break it down to three things. Really, you can only give money, spend money, or invest or save money, right? So give, spend, invest. Christians typically spend a great deal of time thinking about the giving and the spending, right? When you give, you probably have a donor advised fund, you probably have a strategy, you talk about it with your family, you speak about it with your spouse, you maybe even teach your kids how to do it, and you're very thoughtful about how you do it. When you spend, you place a lens on that, right? We all kind of budget our resources. We think about what we're spending on. We weigh that against the values that we embrace. We consider it deeply. And we often have sermons on those two elements of financial resources in church. The third area, investing, however, is one we don't often pay attention to. In fact, I would say there's traditionally been this aversion to incorporating the values of faith and investing, embracing rather this idea that investment should just be viewed through their ability to expand resources without regard to their value, so that you can have more money to give or save on the other side. And in that way, investing has a very clear-cut fiduciary mindset without attention to the values that it embraces. And yet, if you look at these three pools of capital, for the vast majority of well-off Christians or Christian institutions that have endowments, etc., it's that investing bucket that's the biggest of the three, right? If you think about what you earn in a given year, the typical person in the United States gives away less than 5% of what they earn, which is substantially less than 5% of their net worth. In most years, they typically spend less than they make. And after a certain period in life, like many of you typically have more in a 401k account or investment account than you do that you spend annually. And so it's funny that this third bucket of investing is actually the largest bucket. It's the area of our greatest financial resources. And that's certainly true for many of the institutions that we're a part of, churches with endowments, schools, colleges, etc. But it's the one where we apply this idea of faith the least, where we segregate that out from the values that we would otherwise embrace with our financial resources. And so there's this irony that this bucket that contains our greatest financial resources, typically as believers or institutions, is the one with which we think about our faith the least. That hasn't always been the case. We'll go through the longer history of faith-driven investing and what scriptures in Judaism and Islam and Christianity say about investing in a moment. But I always think it's a wonderful story to think back to 1971, which was really the initiation of the modern activist or values-aligned investing movement. And it wasn't a big progressive organization that led that. It wasn't the United Nations. It was actually the Episcopal Church and a Baptist pastor named Leon Sullivan who kicked off the modern values investing movement because of their Christian principles. At that time, the Episcopal Church owned less than 0.004% of General Motors stock, but they opposed GM's policies in apartheid South Africa. They wanted to reform those policies. They introduced a shareholder resolution with the small number of shares that they own, and they effectively allied themselves with GM's lone black board member, Pastor Sullivan, and brought it up for a vote whether they should change policies. They were roundly defeated in that vote. I want to say it was something like 2% to 98%. Harvard University was one of the institutions on the other side voting to preserve GM's practices in apartheid South Africa. And yet, in the months and years that followed, over the next couple of years, the entirety of corporate America was kind of shaken by this activist movement from the Episcopal Church and Pastor Sullivan and embraced something called the Sullivan Principles, which were a series of principles by which corporate America reformed its practices at apartheid South Africa to mitigate the way in which they were participating in injustice in that region, which ultimately contributed, at least in some small part, to the fall of apartheid in that area. Flip ahead, Matt. This was based on really a longer history of faith integrated with financial resources. If you look back, even in the ancient texts of Judaism, again, money is often cautioned about, but it's also true that the patriarchs of the Bible were often given remarkable financial resources. Abraham, for example, was one of the wealthiest men of his day. And yet, if you read the story of Abraham, and there's a beautiful book recently by a Jewish author named Michael Eisenberg that breaks down the uses of money in Genesis and the thoughts about entrepreneurship and capitalism in Genesis. And Abraham stewarded these resources in a way that was deeply aligned with God's view of how he should use them. Of course, the early church embraced this with Jesus and the apostles and the disciples more broadly speaking about financial resources. Islam sharpened a series of principles called Sharia finance. And then up through the ages, people of faith often led on this idea that you shouldn't simply ignore the values attached to the financial resources that you have, that you should embrace those, and that everything that you have should be put towards the principles of your faith, including your financial resources. In fact, it was the founder of Methodism, John Wesley, who defined the negative screens, so to speak, that many of us use today, right, around alcohol, gambling, tobacco, etc., almost unchanged in the several centuries since. And yet, since 1971, when the Episcopal Church and Leon Sullivan kicked off this modern movement, mainstream values or progressive values have begun to dominate the investing world, primarily in the form of something called ESG, environmental, social, and governance investing. If we flip ahead, this category of investing has grown to dominate the investing landscape. I mean, almost everyone in this call has certainly heard of ESG, so I'll be brief. But in short, environmental, social, and governance investing has become the dominant way in which people and institutions try and express a set of values through their investments. And yet, what I like to remind people is ESG is not synonymous with all values. It's actually a specific set of values, often codified in explicit documents like the UNPRI, that lay out a set of goals, a set of morals by which these institutions will abide. And there's been such a hunger for this idea of integrating investing and values that nearly a third of assets in the world are now categorized as ESG. So $35 trillion in 2020. That was actually predicted to grow quite quickly, although it's slowed somewhat since. So I need to get a good update on the numbers, but it's slowed. And that's almost a third of global assets. It's totally dominant. If we flip ahead, Matt, these are often defined by large institutional investors acting on your behalf. And so one of the points of this that I like to remind people is oftentimes we'll speak to groups who say, I really prefer to segregate my values from the way that I invest. I really don't want to think about values. I simply want to invest. I want to trust management. I want to make the best return for my investment. We all want the best return we can get. However, for most people, that is untrue of their portfolio. So if you own ETFs, for example, if you own mutual funds, if you participate in large institutional real estate funds, for example, there is a nearly 100% chance that the vast majority of your holdings in those instruments are held in a series of ESG vehicles or express the values of those whom you've entrusted to invest on your behalf. And these large institutional investors are often dominant, not just in your portfolios, but in the voice that they have in the broader world. If you look at the S&P 500, for example, more than 30% of the S&P 500 is in the top 10 global asset managers. And the big three asset managers have about 20% of the shares of all publicly traded companies. In fact, 88% of all S&P 500 firms, the plurality or largest shareholder is a combination of these three asset managers, BlackRock, Vanguard, and State Street. And what they do really sets the table for the ways that others invest. There have been some movements recently on this, which we could get into. I know Vanguard has stepped away from this a bit, but dominantly these align with the UN principles on responsible investing and with the way that most people view ESG, even having dedicated teams that try and execute these strategies globally. And so almost all of us actually now have an exposure to values-based investing. It's just, do we understand the specific set of values that our investments are expressing? Flip ahead. There has, however, been a pushback recently, and that's where I want to kind of pivot to this idea of faith-driven investing. On both the left and the right of the political spectrum, there has been a major backlash against ESG recently. I mean, most of you have probably seen this in the news. Depending on what news sources you have, you may have gotten a left-wing pushback or the right-wing pushback, but there's been an almost universal pushback. This has been everything from the idea that there's difficulty in quantifying ESG factors. There's something called greenwashing, where someone will call something ESG, but it really isn't. Elon Musk famously started some of this backlash by noting that ExxonMobil had consistently gotten better ESG ratings than Tesla, for example. And it was because they had gone out of their way to do carbon offsets and meet some of the specific box checking of ESG, but they hadn't really accounted for the fulsome impact of those companies on the environment, right? And so you ended up in a position that was likely unjustifiable if you took into account those broader contexts. There's also been proof lately that most ESG mandates lead to lower returns. So there's been a variety of academic research on this through Harvard Business School and other organizations. And there's been a lack of transparency. So people will label things ESG, they'll vote on your behalf, but they won't even tell you how they're voting. They'll often use your shares to vote a particular perspective without fully communicating what that is. And so there's been a big pushback on ESG. However, for most people, that's also turned into a pushback on this idea of values-based investing. And what I would counter is this is actually a remarkable moment in time for people of faith, not to simply reject this idea that values and your investment dollars should be considered in tandem, but instead to redefine what those values are, to come up with a distinct set of values that we as Christians could embrace that truly express the values of our faith that lead to human flourishing, which Matt's going to talk about fully in a moment, and that try and put our stamp on the world using the dollars that we have, directing those towards kingdom purposes, just as we would our spending and giving. Flip ahead, Matt. Oh, sorry, stay right there. This can manifest in a number of ways, and we can talk about some of these tonight. The first is negative screening. As I mentioned, John Wesley set some negative screens up in the 1700s. Those have barely changed since then, but there are a variety of ways in which people approach these. I know that one Baptist institution has given us a list of 800 and something stocks that they want to exclude. The Catholic Church has a list of stocks they want to exclude. And this typically just involves avoiding things that you don't believe in: adult entertainment, gambling, alcohol, cannabis, etc. We at Sovereigns tend to prefer to move beyond negative screening into some sorts of positive screening or engagement. And that can look like a few different things. First, you can come up with thematic-based themes that allow you to positively screen for companies that are making an impact for good in the world. Matt's going to describe one way in which we at Sovereigns do that, but that can look like a variety of things. You may have heard of an asset manager called Eventide, for example, that tries to apply its positive practices in healthcare investing. It tries to apply that more broadly through a Business 360 framework that it has. Some of you may be familiar with other publicly traded funds that try and positively screen for companies that are making an impact in the world for the values that we would embrace. The third way in which you can have an impact is exactly what those large institutions were doing, but just with a series of values that you would embrace, an engagement or activism to influence corporations. And this often looks like simply trying to align with managers, either wealth managers or asset managers, who will vote the shares of public equities you have in a way that's reflective of your faith, rather than just the largely embraced principles of ESG at the large asset managers. This can also look not just like voting, proxy voting, which we can describe, but sending letters to boards of directors, calling public company CEOs directly. Matt will talk to you in a moment. He's actually had the good fortune of hosting a roundtable of 9 public CEOs recently in our portfolio to talk about the values that they all embrace. We get to call and talk to these CEOs and their boards sometimes about the introduction of things like adoption benefits at companies, for example, or other things that we think might make their workforce position better, like chaplaincy or even Christian employee resource groups. The fourth thing that we look at often in venture capital or private equity or real estate, where you own a more substantial chunk of this investment, so not a small chunk like a public company, but perhaps even the entire thing, is company and cultural formation, which is really where we at Sovereigns focus the most, which is to say, if we own a company or if we're on the board, if we get to directly speak into that company, how can we shape it in a way that we think helps people to flourish with good maternity and paternity leave policies, with the influence of corporate chaplaincy, with fair treatment of employees? And we believe that that cultural formation, which Matt will speak to in a moment, not just is the right thing to do for human flourishing, but can actually lead to outsized returns, which I'll come to in a moment. But this doesn't have to be in tension with making money, and instead can reinforce a better return for your impact investment. And then the final area is concessionary impact, where you're explicitly embracing a trade-off on the return that you're getting for an investment in order to have an impact on the world. An example of this that we've been working on recently with a partner is charter school funding. Charter school facilities are one of the most expensive things for a startup charter school. There's actually a lot of philanthropy involved in trying to stand them up, but there's a way in which you can combine philanthropic capital and market bonds to get lower rates on a lease for a charter school that aren't high return, but have an extraordinarily high impact if you're willing to embrace that they reside lower on the return spectrum. All these other categories, we think you can make a market rate return, but we do think there's an opportunity in some areas to have concessionary impact. And this can be implemented in donor advised funds, in family offices, and retirement plans, and endowments and foundations, anywhere that assets are stored. Flip ahead, Matt. Just to give you an example, so Sovereigns Capital, and we won't linger on this, I showed you examples just a moment ago of $10 trillion asset managers. My former asset manager managed about $1.5 trillion. And so you can say, how do small asset managers like Sovereigns or Eventide or Crossmark or Timothy Plan, how do they make an impact when these large managers are out there? But if you start looking at the individualized impact that you can have, our private equity practice, for example, owns companies that have more than 2,000, I think it's actually closer to 3,000 employees right now, employees' lives that we get to touch every day through the operations of those companies. Our venture portfolio, by virtue of some of these venture companies becoming quite big, touches more than 5 million employees all over the world, including Southeast Asia and some places that are difficult for many Christian organizations to reach. Our public equities portfolio, I think this is just for the Omega Fund, touches more than 3 million employees. Our real estate portfolio has 15,000 units and 20,000 tenants. And through our fund of funds, we've actually deployed into other funds that have leveraged that for more than $3 billion in deployed capital around the industry. And so even with relatively small amounts of capital, you can have a massive impact. And of course, $725 million, they're in your city in Pittsburgh. There are institutions, endowments, foundations, colleges that have well more than that capital at their disposal and could potentially use it to impact the same number of lives. Flip ahead, Matt. We don't want to give the impression tonight that Sovereigns is the only way to do that. And one thing that I think is beautiful about what Tim and others are standing up is this affinity group, or this group of connecting around faith-driven investing without prejudice towards a particular manager. You all are talking about this in general, not for profit, so that you can identify ways in which others can get into this. And we would be here to tell the first to tell you that there are a variety of asset managers now who are rising the challenge to try and present you with opportunities to invest in a way that's aligned with faith. We've listed some here. There are more, but this chart has grown dramatically over the last couple of years as the faith-driven investing movement has taken off. And we expect that the more capital that folks continue to deploy in this area, the better we'll have growth in these charts for aligned asset managers and investment managers who are trying to do the right thing with capital and are working on your behalf with the types of values that you would espouse. So one of the encouraging things today is there are more ways to do this than there were 5 years ago or even a year ago at this time. And I think that's a very positive thing. Flip ahead, Matt. You can go ahead and flip ahead, Matt. And so with that, we're going to wrap up the kind of market overview, and I'll pause for a moment so that we can talk there. And then what we wanted to lead into was I just gave you a very general framework, and I stated things like we believe it's possible to have market rates of return or better while also having a positive impact aligned with the values of faith. There are lots of ways to do this. You can do it even in public companies. A lot of assertions that I made in a very broad way. We're going to pause and talk through those, and then Matt's going to take you through some specific examples of what we're learning in public markets about portfolios that we've created that do just that, and the early results of those portfolios and the way in which we're seeing that lived out in the companies that we've invested in. But I'll pause for a moment and see if we want to take a few questions before we do.
John, I'll just start not with a question, but just that was incredible. In that last slide, I mean, that's going to be a great resource for us to put on our Mighty Network for people to see what are the funds like if they want to invest differently. You know, who are the financial institutions specifically targeting Christian businesses, be they private businesses or publicly traded businesses, right? So if anybody has a question, just kind of unmute and speak up. Otherwise, we'll get to Matt, and we'll have plenty of time for questions at the end. I don't see anybody unmuting. So Matt, why don't you take it away? And let's get practical on, you know, a question I had is, are there publicly traded companies that are Christian companies, or is that a legal thing to even say that you can be a publicly traded company that's Christian or has Christian values, or where do we stand on that?
Yeah, thank you, Tim. And it's so good to be with everyone today. I'm looking forward to a whole lot more questions than you asked for John at the end of my presentation. So we'll move quick because we want to provide a lot of time for discussion. But Tim, you asked a great question. So John teed up that a lot of the way that faith-driven investing has worked over the last 300 years has been to avoid companies that destroy human flourishing. What we've been doing at Sovereign's Capital over the last 12 years is we only invest into companies that have Christian CEOs at the helm that are leaning into culture to create a culture that enables their employees to flourish. What we firmly believe is that when you love and care for employees, you end up generating a great culture. When you generate a great culture, you attract and retain some of the very best employees in the marketplace. And we believe that when a company can attract and retain some of the best employees in the marketplace, it sets that company up to be able to achieve outperformance. And so, as John mentioned, we adhere to the negative screening, but we're spending 99% of our time looking for the needle in a haystack, as Tim mentioned, of the publicly traded company led by the faith-driven CEO. And so that wraps up what we do and what we believe in a nutshell. So what we're about to do is get practical around ways to engage in faith-driven investing. There's multiple different private asset classes and alternative markets that include things like venture capital and private equity and real estate investing. Now, due to the perceived increased risk of some of those asset classes, there are legal hurdle rates for investors to be able to engage in those investments. So there are different terms, such as a qualified purchaser or a qualified client, to engage in some of those alternative market investments that I mentioned. The public equity markets is a market that Sovereign's Capital has developed over the last few years that takes investor capital and then invests into publicly traded companies, as you mentioned, Tim. So what we have done with the Sovereign's Capital Flourish Fund ETF is we've put together an exchange-traded fund. It trades on the New York Stock Exchange under ticker SOVF. It's available to anyone with a free brokerage account and $28 in their brokerage account with free trading commissions as well. So we like the framework of that because up until now, Sovereign's Capital has had a heart to be a leader in faith-driven investing. But up until now, we could only serve a specific subset of high net worth individuals and institutions and family offices. So we're pleased to be able to serve the broader market through this exchange traded fund. So I'll dive into some of the details here, and then we'll swing back and we'll cover any questions. So in terms of high-level structure of what we're doing in the public equity investment space at Sovereign's Capital, we, one, invest in companies led by faith-driven CEOs, as I explained. Two, we're looking at 6 different criteria. The first being the CEOs themselves, but then the 5 other criteria actually touch points of the company. So I'll hit them really quickly. What we do is we look for companies that have significantly above market HR benefits because we believe that provides the company an opportunity to demonstrate love and care for every employee of the company. We invest in companies that have chaplaincy. Chaplaincy not only walks alongside employees through the struggles that they all encounter in life, but it also has a positive financial ROI for companies that install it, often receiving substantially higher employee retention rates and higher margins as a result of those higher employee retention rates. We look for companies that have a vision, mission, values that's focused on things like servant leadership and the golden rule. Most companies focus on customer service or on shareholder returns. But what we do is we focus one level up on servant leadership because it not only delivers customer service and shareholder returns, but it governs how employees treat one another. When you have that figured out, now you've created a culture that attracts and retains high quality employees. And if you don't have high quality employees, you're not going to be able to outperform your peers. We look for companies that have a product or service that enables employees or customers to flourish. We look for companies that have Bible studies and prayer groups in their employee resource groups. So these are a few examples of the 6 characteristics we look for when investing and when honing the market down. We have 330 companies that are on our investable universe list. And so just to quantify that for a moment, in the United States, there are 4,000 publicly traded companies, 3,000 of which are large. Of those 3,000 publicly traded companies, 330 of them are led by faith-driven CEOs that we would consider investing in. So now we've talked a little bit about the structure in terms of what we look for. Why don't we pivot quickly? I'll give you a really brief company example of what this looks like in practice to have a faith-driven CEO at the helm. Now, I advise all of you, do not read the words on the screen. There are too many words on the screen. This is meant to be a handout so that folks can track along with the types of companies we invest in. But I'll give you a quick recap on one of our CEOs in our portfolio. So Jason Lippert, who runs LCI, realized 10 years ago that he had a problem. His employee turnover was 120%, which meant that 120% of his employees were quitting or leaving every year. That number was incredibly high. He was spending his whole time just recruiting and training employees. So he went on a listening tour to figure out what was wrong. And after he went on that listening tour and started fixing things, what he decided was, why stop there? Why not go on offense and ask these people what it is that they dreamed about? And when people said that they wanted to lose 20 pounds or quit smoking, he hired pastors and sports coaches to help them do just that. So you fast forward a couple of years, and now the employee turnover is only 25%. So it's improved from 120% to 25%. You can only imagine that that drives financial results for a company. This is also a company where if you ask Jason what the number one part that they manufacture is, he would tell you, well, the number one service that we provide is servant leadership within the organization. And that's what we manufacture. So they have Bible studies on campus, prayer groups, chaplaincy. They had their first baptism a couple of years ago. And then they export all of these best practices to their competitors, to their vendors who want to come and learn. This is a good example of what faith-driven investing is looking for from our definition of what we are targeting, and then what you can do as a publicly traded company with 17,000 employees. On the back end of that, we know that spiritual integration like this drives performance. But what we're looking for after that is to make sure that a company meets all of our financial criteria. So we want to ensure that companies have an appropriate amount of leverage, they're not over earning, and they're not overvalued. And so those traditional fundamental criteria that most firms look for is what we're doing after we qualify a company from a spiritual integration perspective. And so I'll touch on one more thing, and then we'll round out this conversation on public equity investing. At Sovereign's Capital, we focus on two things: performance and impact. So as you see, when we go after the kind of faith-driven companies that we're looking for, we believe they deliver performance because they have great cultures that elevate employee retention rates. And when you have high employee retention rates, you get performance. On the impact side of the equation, we're already coming alongside what we believe are the best of the best publicly traded companies in the United States from an impact perspective. The impact that they're already having on their employees is incredible, and we're thrilled to be able to align our capital with those companies having that impact. But second to that, as John mentioned earlier, back in August, we brought together 9 public company CEOs around a table for them to be able to share best practices with each other over a 6-hour in-person session. I spent the first 15 minutes setting the table, about the same amount of time that we're talking here. And then the next 5 hours and 45 minutes, the CEOs told stories of how they installed programs like chaplaincy, and that program led to that plant that they trialed chaplaincy in to become their highest performing plant with their highest margins. And they rolled chaplaincy out across the entire organization. Skipping to the end of the story, coming out of that meeting, we had one public company CEO with 5,000 employees install chaplaincy within a few weeks coming out of that meeting. And so we were thrilled to be able to share with our investors that this is what their capital was doing. It wasn't just aligning with the best of the best, but helping the best of the best take next steps and serve their employees in an incredible way. And then lastly, before I turn it over, as John mentioned, we launched our first public equity fund a couple of years ago. That fund is called the Omega Fund. The Omega Fund has generated approximately twice the return of the market at 21% net of fees versus the market at 11% over the last 2 years. And many of you will know, listening along, that most of the companies that generated the majority of the stock market returns over the last 12 months were what are known as the Magnificent Seven. These include Amazon, Microsoft, Apple. As you might also guess, we don't own any of those companies at Sovereign's Capital. And so we're really encouraged watching the faith-driven CEOs of other companies in the marketplace generating such strong cultures that generate such strong financial performance that they doubled the rate of return on the market. So with that, I'll turn it over to everyone in Pittsburgh for questions.
All right, so let's just make this a dialogue. So let's see who's got a question out there. Yvonne.
Hello. How's everyone doing? You mentioned the proprietary database of your 330 faith-aligned CEOs. I'm just curious as to how you populate that database and gather that information.
Yeah, thank you for that question.
On faith-driven CEOs. I'm just kidding.
That's good. That's a great question. The way that we populated that initially was through talking to people just like you. And we received over 80% of our leads through just making phone calls to folks like you who would be in the know around who those people were. And then over time, once people started to get to know us, then people were reaching out to us.
So we could do the same, Matt, if anybody on the Zoom call or anybody who listens later on our YouTube channel has a local Christian-led company, publicly traded, they could get hold of you. And they can do that through us here on the Pittsburgh network.
Yeah,
okay?
I'd be greatly appreciative.
Yeah. And I know we've got some business owners and some CEOs on the line here. Some are not publicly traded. So we have some potential others, but we can maybe talk about that later, maybe offline as well. So part of this call was to educate our team, but also want to just kind of introduce you guys to the Pittsburgh market as well and some of the folks who are here. So let's keep the questions going. Who's got another question?
There's a good question that came in over the chat. Who are the chaplains? And there are two very large chaplaincy organizations that serve a number of public companies. One is called Corporate Chaplains of America, and one is called Marketplace Chaplains. Chaplains are incredible because the cost is only about $10 per month per employee. So it's really approachable. And then there's also other newer startup options that do a great job of serving companies in a digital way. And so we'd love to make all those available.
Yeah, actually, it's kind of fun. The Corporate Chaplains of America is run by a guy who was in Pittsburgh for a long time, Larry Griffith.
He's a great guy.
Larry's awesome. Yeah, known Larry for a long time. In fact, one of the things Larry shared with me, Tim, that might be part of a future watching or even now, he said he would love to expand into the Pittsburgh market. He's been looking for folks in this area to help him with Corporate Chaplains of America. So someone knows of someone who'd be interested in being a corporate chaplain. I know Larry has said he expressed some interest in that for our region.
That's perfect, Craig. One, thanks that you know that connection. That's awesome. But when we look at why did we set up this network? We set it up for God to move the way he wants, just to start connecting people. And it's not what any one of us do, but collectively, when we get this team together, and we're a couple hundred people now, hopefully soon a couple thousand people here in Pittsburgh. And with that ecosystem that we're building is going to have some really powerful things. So that is one example, Craig, of where I hope this network goes over the months and years ahead. All right. Who else has a question? I mean, I could ask like 20, but you guys don't want to hear from me. There's a lot smarter people than me on the call. So
I have a question. I went out on Seeking Alpha and I looked up the fund and I saw like the top 10 holdings, and I wondered how you decide how to allocate across these different companies. Is it all equally? Or if not, how do you decide what your top 10 holdings are versus the rest of your holdings? Is it based on faith-based initiatives or other things?
Thanks, Josh. What we've learned through a couple years of experience with the Omega Fund and then running 10 years of analysis before that is that the companies with the highest degree of spiritual integration develop the best cultures, and the companies with the best cultures deliver the best results. So there isn't any natural tension for us around how much impact do we want versus how much financial performance are we seeking. We think that the companies with the greatest impact also deliver the greatest financial performance. What we're doing then, Josh, is we're taking our companies with the highest spiritual integration scores, and they're good candidates to be our largest financial weights in the portfolio. But then we also are looking at all the financial characteristics of the companies. And when we find a company that we feel is trading at half of what it's worth, or in and around that area, that's also going to be a key factor in whether or not we want to put additional portfolio weight behind that company.
I see. Thank you. What was the name of the score that you mentioned? The spiritual something score?
Yeah, this is just Sovereign's talk, but yeah, we call it spiritual integration scores. It's a pretty lofty term. What it means is those 6 criteria that I talked about. If a company's got chaplaincy in every plant, they score a 10 on a 0 to 10 scale. And if they've got servant leadership at the core of their vision, mission, values, they're going to score either an 8, 9, or 10 on our metrics. And so companies that score really highly across all of our different categories, that all rolls up to an overall spiritual integration score that would be really high.
It's just a way for us to kind of put slightly more rigorous thought around what it looks like to have kind of spiritual integration in a company, or to express really positive values for human flourishing in a company. So you would look at a lot of those values that Matt talks about, and I think many of them would be agreeable to almost anyone, right? I mean, people would agree that they love to work in a company like that. And some of them are quite distinctively faith aligned. It's just our way of trying to get more objective about the way in which we think about those things.
It also seems, John, like to me that that's kind of your secret sauce at Sovereigns, at least from the public equity standpoint. Because as an investor, right, we've talked in some of our prior network gatherings of from an investor looking at financial returns and kingdom returns, right? If we did that on the old 2x2. But what we struggle with individually is how do you measure a kingdom return, right? So what I like about your approach is you do come up with your qualities and quantifications of how do you measure that. And some of them, I'm sure you can't get into all of it because that's, like I said, that's kind of your secret sauce. But to me, that's where the rubber hits the road on how do I, as an individual investor, try to make a kingdom impact with my resources, right? I think that's something that all of us on this call, wrestle with, right? And so, let me just open it up. What has anybody out there done something that you want to share with this group? Like, how do you look at making a kingdom return with your resources? And don't be shy. I know there's a lot of smart people on this call because I know you. Matt, you got something?
Yeah.
Go for it. Yeah.
Well, this is, I think, John, what you said before between when you looked at, what was it, giving and investing, and what was the third one?
Spending.
Spending, right, exactly. I mean, the investing part, I think, really is something you don't think about. And I think you've really highlighted some things about how to look into companies, which obviously gives me some thought about, investing in Christian-based companies that I really never thought about before. And even though, Matt, what did you say, 330, Christian-based companies compared to 3,000? I mean, well, that's 10%. That's not too bad, actually, more than I thought, to be honest with you. So I think that creates a lot of opportunity and a lot of food for thought here. I wondered about these CEOs that you've identified and that you're investing in, doing well, and obviously doing well in your fund, but kind of how they see continued pressures on their business and on their performance going forward in what is an increasingly non-Christian culture that is not just non-Christian but anti-Christian. And how they have to struggle through those things, while at the same time trying to maintain, if not increase performance.
Yeah. So, Matt, there's some companies that we invest in where they've got Bible verses on the top of the conference room walls, and they've got them on the outside of the building, and they've got them on their sleeve. But really, 85% of the companies that we invest in, the way that the faith-driven CEO leads is through love of neighbor. And love of neighbor, as John suggested, is not typically rejected by employees or by the press or by anyone in the marketplace. And so a servant leadership culture at the core of a company, everyone on this call knows that came from Jesus. But if you look it up on Wikipedia, it's going to tell you that a man wrote a book on servant leadership in the 60s. And that's actually what most employees believe. And so it's become known as just a great management style. And so for our CEOs who employ that, they're not really getting any pushback about their faith-based values.
I'll tell you on the corporate engagement side too, one thing I found interesting, and this could be said beyond Sovereign's Capital, because again, we're not the only folks doing stuff here. The corporate engagement side can matter a lot, right? Because CEOs of public companies often hear from activist shareholders on a variety of issues. They just tend to be on one side of those issues. If you have asset managers or investors on the other side of those issues who are offering letters to boards or to CEOs that show that shareholders are not unilateral in the way that they think or homogenous in the way that they think, that push for what we think of as more values-aligned policies, that can often be a deciding factor in helping a company to back off of more extreme positions or to moderate their positions versus what they might otherwise with activist investors who embrace a different set of values. So there's actually a spectrum of things here, I think. I mean, as I mentioned in the slide, on kind of cultural formation to corporate engagement to negative screening, even that engagement perspective in companies, like Matt has a much deeper level of engagement than almost anyone I've ever seen. But there are great firms out there that are advocating for positions that we would agree with, and that helps to really encourage CEOs and boards to stay the course in companies when there are a lot of pressures to do the opposite. So to your point, we know there are a ton of activist pressures here, but that's even more important than in very reasonable terms, we express a voice for the positions that we hold dear so that those are reflected in those boardrooms.
Thank you.
So maybe one thing that everybody can do, and Matt or John, I'd be interested in your thoughts on this. You showed kind of the big three, BlackRock, Vanguard, and State Street, and then Fidelity's right there, number 5. And, a lot of us have 401ks, IRAs, or other brokerage accounts there. And we basically outsourced our influence to them. Is that right? And are there alternatives to where instead of BlackRock getting my shares and they then control these stocks, for me to give these, are there kind of Christian-led S&P 500 index or other good funds that are competitive and don't have a huge fee associated them, but are competitive with BlackRock and Fidelity that I could do to take advantage of that? Or do you advocate people taking custody of their own stocks and doing that on an individual basis? What's the best way for a common investor to get influence?
Matt, do you want to say?
Yeah, so within and there's a couple other great questions in the chat here too. We'll jump on. Thanks for all the good questions. Within the faith-driven investment space, Tim, there are not great passive alternatives to the S&P 500 that are also being voted in line with biblical values. There are really great active alternatives to the S&P 500. And so when we went and set forth, John and I put our heads together to put together the Sovereign's Capital Flourish Fund, ETF, SOVF. And what we did was we set it up in such a way that it would be able to be the core US public equity allocation for people. And so when I say that, I mean it covers all industries, it covers a mix of value and growth, and it's 1/3 large cap, 1/3 mid cap, and 1/3 small cap. And so with it, because it's an actively managed fund, it does have a slightly higher fee, as we mentioned, but for that fee, you get the research that we do to identify the faith-driven companies, and then what we believe will be above market performance. And then on the back end, then our team, we're voting the shares, and we're voting them in line with biblical principles, not the world's principles. So it ends up fixing that voting problem that's in place.
And and we'll obviously stop short of endorsing other funds or managers for a variety of reasons, but I'll articulate what I've seen in markets. I'll say that. This is a common problem, Tim, because the economics behind an S&P 500 fund, for example, you really only break even on those funds at around $10 or $20 billion in assets. They tend to operate at scale because the big companies basically give them for free for securities lending and things like that. And so BlackRock, State Street, Vanguard, Fidelity, Schwab really do have a dominant market share of index ETFs, for example. There are alternative ETF providers out there that I'm aware of that are explicitly faith-based, like Verity and Inspire. There are a series of mutual fund companies that are also explicitly faith-oriented, like Crossmark, Eventide, Timothy Plan, et cetera. So there are actually quite a number of vehicles. And then the other that's out there that's gaining some traction on wealth platforms is called Vidant Asset Management. And it's introducing what's been around for a while, which is effectively direct securities trading. So rather than buying something in an ETF wrapper, if you just want the S&P 500, you can buy what they call an access portfolio. They're working with a couple of wealth management platforms right now. It would have to be through a wealth manager. But basically, you're getting a portfolio of those directly traded securities, and then they offer a menu of voting options. So they have a couple of different voting options for corporate engagement that you can subscribe to, depending on what types of voting you would prefer to embrace with your portfolio. I suspect we start to see more of that now that this monolithic structure has been challenged a bit. In full transparency, Vanguard has backed off of some of its prior positions a bit and has moderated. I think some of the other larger managers are probably headed that direction as well. And so, part of the good news story of this is I think the pushback and the rise of these alternative managers helps to moderate the big managers, which I think is a win net for diversity of perspectives. But there are a variety of mutual fund and ETF managers out there, and even some direct securities trading that you can do now through platforms like Vident, if you're thoughtful about the way that you pick them, in addition to what Matt articulated with some of the funds that we have.
Okay, so Dean had a question online. What stage must a company be in for consideration?
So I see the word startup in here. Sovereigns Capital does have a venture capital investment business. And if you're aware of startup businesses that are looking for financing, we'd love to talk to them. And so we would put you in touch with the team that runs our venture capital group. In terms of which stage from a public company perspective, we're oftentimes looking for companies that are north of 100 million of market cap, but we like to be aware of all the companies that are sub 100 million in market capitalization because we watch them. And oftentimes we see those CEOs getting hired by much larger companies because they're running a really tight ship at their current company. Another great question here. Is the Omega Fund closed? The Omega Fund is open for new investment.
Matt, what do things look like for you guys when you're evaluating companies that score high on the faith metrics or kingdom metrics, but you don't like the financials, or maybe you don't like the sector? Could you talk to us a little bit about how you use more traditional criteria to evaluate?
Yeah, thanks for that question. About 40% of our companies that have high spiritual integration scores, we do not invest in because they don't meet our financial criteria. And that's just a range of all sorts of different things. It might be that they have too much leverage, or they're in an industry that's dying and all the companies seem to be going bankrupt. A number of different factors could cause that.
And that's one of the things we hold tight to with our investment philosophy is we try to invest in companies that have the possibility for outsized performance alongside genuine values integration. And we try not to compromise on that. We really like to see both in their fullness. And so where a company doesn't have the performance characteristics we look for, regardless of the area that we're investing, we try to be disciplined about that, while also holding pretty tightly to the value screen.
I was recently introduced to something really cool, Lion's Den.
Yeah.
And for the first time ever, it was actually really refreshing. They asked the founder, CEO, about his faith. I've talked to tons and tons of investors who only asked me about the startup and its growth. And it was really cool. They were diving into the character of the founder. And I think that's a really intentional, important, cool thing they did. And it's just really refreshing and kind of a neat thing to interact with those people and apply to be part of the pitch competition this year.
Lion's Den's a great outlet. We've been fortunate to participate there for a while. It's a great organization.
Does Sovereigns have a similar kind of screening process?
We, as Matt mentioned, it differs a bit because we have venture capital, private equity, real estate, fund of funds, public equities. The screening process looks similar, or it looks differently by each of those. But yes, we definitely dig into the founder, motivations of the founder, character of the founder, the culture of the company, spiritual integration, et cetera, across those different strategies. It looks a little bit different for a multifamily housing unit and a startup technology software company and a mature heavy equipment company in Matt's portfolio. Those, we try to be flexible enough that we can account for the legitimate differences in the way that those types of developments run. But there is a screening process for each of those, and the managing partners of each of the funds try to be really thoughtful about the best way in which to implement that within a venture portfolio or within a real estate portfolio or within public equities that's suitable for that particular asset class in those companies.
All right, Craig, and Lions Den, that's when we grow up here in Pittsburgh with the Faith Driven Network. I hope we can have a Lions Den or some. Yeah, we have talks underway of how do we start something like this, and I'm hopeful that this year we start making some progress that way, because I know the entrepreneurs in the network are really eager for that, right? And part of the whole faith-driven movement isn't just about investments, about how do we encourage the entrepreneurs. So, and you're one of them here on this call, and there are others. So we want to have solutions for investors and entrepreneurs. So, all right, well, let's see if there's some final questions. I know some of you are much better investors than me, so I want to give you one more chance. Otherwise, I'll be having to call you individually to get your pointers. But either just some best practices that you have, or a final question for John or Matt.
Well, I would just offer, Matt, I think, put our email addresses in the chat, and Tim obviously has those as well. Tim, if you'll allow me to say, we're really grateful for this. We're grateful to all of you. We know it's late on a Monday night. And I can't believe we're more entertaining than whatever streaming platform you guys had set up for the evening. But we're really grateful to have been joined by y'all, and really grateful for what y'all are doing in Pittsburgh, and those of you joining from outside of Pittsburgh for having us and for leading this.
Well, I appreciate it, John and Matt. Thank you guys so much, and everybody joining. I know I've heard from probably a dozen people that couldn't make it tonight, but they promised they're going to listen this week. So we'll be, with the help of Dean, we'll be getting this out on our YouTube channel, and we'll let you know from the network. But before we go, I do want to make a pitch. We have our Faith-Driven Investor Watch Party coming up February 22nd. We're going to do that at Burgo. Now we've got, Matt was part of the Faith-Driven Watch Party in Denver a week or two ago. And he said, what was it, Matt? 30 to 40 folks there gathered in Denver. We hope to beat that in Pittsburgh. It'll be the same thing. And I heard the content was amazing, and the local dialogue when you get a group together is incredible. So I hope everybody who made it here live can also make it down to Burgo. It's a local real estate company here in Pittsburgh led by young Christians with an amazing culture. So what Matt talked about that he's looking for publicly traded companies. Burgo, we had one of our early events there. I was blown away by the culture that they've set up. So that'll be on Thursday, February 22nd. I believe it's 6:30, but we'll be getting that announcement out. So we'll have an event on the Mighty Network. Look to that. Also, our future treasure talks. And again, you guys did set a very high bar. But some of the things, John, you mentioned in yours are what we're going to cover in our next couple. So we try to do these on the first Monday of the month. The exception to that is March. So March 11th will be our second same kind of event. So hopefully you come back and you tell your friends and we get more people online next time. We're going to be talking about self-directed IRAs on March 11th. So where you want to do some creative things, be it real estate, be it a private equity fund or whatever, you may have to move some of your monies out of traditional IRAs. There's a whole world of self-directed IRAs and do's and don'ts on that. We're going to do that on March 11th. On April 1st, we're going to talk about donor advised funds. And donor advised funds are where you give up control But you can do some really cool things with those funds, and you don't have to be a multimillionaire to set up a donor advised fund. It's kind of like a family foundation, but kind of anybody can do it, or just about anybody. So we'll talk about that April 1st, Monday, April 1st, donor advised funds. On May 6th, we're going to have a very interesting debate and dialogue and learning session on is Bitcoin a faith-driven investment? We may talk about other cryptos as well, but the focus will mostly be on Bitcoin. And it's a very hot topic, and we're going to have some local speakers talking about that, and you won't want to miss it. That one I'm really eager to see. And we're going to wrap up the spring series on June 3rd. And as you are invited by those of us here in Faith Driven, we really want your input from here. And your input here will likely dictate what we do on June 3rd. So if you want to dig deeper in one of these topics, we can cover a whole plethora of different faith-driven investment options and kind of review, or dig deeper in something that y'all want to dig deep in. So anyway, I appreciate everybody jumping on tonight. If there are any questions, feel free just to put them in the Mighty Network. If you haven't joined our Mighty Network yet, and you're listening online, or you're here and you haven't joined, www.faithdrivenpgh.com. And that's how we communicate with each other, share resources. So the presentation, John, that you shared tonight, if possible, I'd love to put that on our Mighty Network. I loved every slide, but that slide with all the different investment options and fund companies, that's just a great resource for our team here. So without anything that anybody has, I just see some thank yous out there. So yeah, outstanding job, John and Matt. Thank you guys. Great start to this spring series, and look forward to engaging more with everybody on the call. Have a great night, everybody. Bye.